Hello, hello, hello. Welcome back, everybody. It's your boy, Chicago Sean McLaughlin. Today is Friday, January 29th, 2021. It's the end of the week, the end of the month, and we're off to the races in 2021. What a start to this year. We thought 2020 was crazy. 2021 looks like we're going to keep that movement going. What a crazy few days, especially with all these stocks that are getting run, all these short stocks, stocks that are heavily shorted, getting run by the Wall Street bets, the Reddit people. Wow, just crazy stuff. As an innocent bystander who has no horse in this race, it's certainly entertaining to watch. So I'm going to bring up my screen here and show you guys what the S&P did this week. You can see we had some give back in the S&P the last 3 days. In particular, we sold off pretty good. And my report to you guys this week is going to be, a little bit of both. It's going to be a little bit of good news, a little bit of bad news. Let's talk about the good news first. The good news is on in alpha terms, my trading strategy has outperformed the S&P this week by the tune of almost 100 basis points. So that's good news. The bad news is still down in absolute terms for the week, and that's certainly not what I'm in the business to do here. Yes, I'm outperforming the S&P, and that's great, but still want to make money. That's the whole point of doing this whole exercise, is to make money. So let's bring up where my position looks right now. It's going to look like a mess as soon as I zoom in on this stuff. A whole lot of options, lots of shorts, lots of longs, lots of calls, lots of puts. It's pretty messy. But the thing today is that I came in when the market opened this morning. I did not have any short options expiring today, or I had one way out of the money call. But to meet my daily cash flow goal that I want to meet every day this week, I wanted to bring in $200 cash flow every day. So early on in the trading day, I sold a couple call spreads because my position was leaning heavily, not heavily, but positive delta. So I sold some call spreads to bring in a little bit more than $200 just to get the day started. And then I wanted to roll out all the expiring long calls and long puts that are protecting my position, which I did a number of those trades this morning. And as the market moved, the new options that I sold expiring today needed to be rolled out. So I did all that for credits. Just a flurry of trading today. And I don't want to get you guys lost in the details, but I mean, look, these are all the trades that I did today. It was a lot, more than I wanted to do, that's for sure. But at the end of the day, the tally is I brought in $465 in net credit, minus commissions and fees. Let's call it $410. So I actually brought in a little bit more than I wanted to, right? I really just want to bring in 200. That's the goal. So I doubled my goal today. Hey, that wasn't what I was trying to do, but we'll take it. As you can see on my spreadsheet here, let me bring this spreadsheet a little more front and center. And let me blow it up a little bit so it's easier for everybody to see. Here's where I kind of break down my risks. I got the puts listed on the left-hand side, the calls are listed on the right-hand side. In the red here, these are all my short options. So I'm short 3 at the 373 strike. I'm short 2 at the 377 strike. I'm short 3 at the 378, etc. And then these are my longs. Really, the number that makes the most importance right here is the exposure. So I got total put exposure at $4,200, total call exposure at $3,100. So really, I'm worried about the puts more because there's more at risk there. And so worst case scenario, if the market crashes on Monday and all of my short puts get put against me, and then I exercise my long puts to cover those positions, the net cash exposure to me, I'll have to pay out $4,200. That's the most I would have to pay out, is $4,200. So far, I've brought in, since I started this campaign 3 weeks ago, or 2 weeks ago, I've brought in $2,357. So in the worst case scenario, I would lose money. I'd be down about $1,800. Not ideal, not where we want to be. But again, this is worst case scenario. Okay, we always have to be aware of what the worst case is, right? If we don't know what the worst case is, it's going to surprise us, and you don't want to be surprised. So that's where I'm sitting at right now. Let me move this back off the screen a little bit. And so today I succeeded in having positive cash flow. That's goal number one, right? Let's bring up my my table here. So most of my position here is in options expiring on Monday, February 1st. You can see all over the place as the market has moved. I got short puts here at the 373 strike. I got some short calls at the 371 strike. So if the market were to open right here where we're looking right now on Monday morning, first course of action would be to roll these short puts that are in the money. I will look to roll them out to the 370 strike in the next expiration series where I can get a credit. Okay, I always want to roll short options for credits. That's the goal. And then these long options, I will roll these out. I will calendar roll them out to the next expiration series for a debit. Once I do all those rolls, we'll see where my cash flow situation is for the day. And if I'm negative cash flow, then I'll put on some more trades to bring the cash to the target that I want it to be. And if, we'll use the delta as a guide, right? If my delta is leaning a little one way or the other, maybe we'll just do call spreads. Maybe we'll just do put spreads. If we're already neutral, then I might just do what's called like an iron butterfly, right? Where I sell the at the money call and at the money put and protect it 25 deltas away on the put side, 25 deltas away on the call side. So that's where I ended the week this week. A lot of trading today. Got to tell you, I'm a little bit exhausted. Didn't want to do this kind of trading. That's not what I want to do. I don't want to be trading all day long. And maybe I probably overthought it a little bit. But still hit my positive cash flow target. And as long as I keep hitting that cash flow target, it is my belief that once we get some mean reversion, once the market quiets down a little bit, I mean, look, it's been pretty volatile this week, right? So this kind of stuff should be expected. But once we get some mean reversion and things quiet down, short options will begin to expire away, and I'll start lowering my overall risk in the portfolio, in the position, at which case eventually the cash flows that I've collected, that I've retained in my account, will exceed the max risk that I have on any one side, whether it's the call side or the put side. Everybody have a great weekend. No football this weekend. What the heck are we going to do with ourselves? Anyway, I'm sure you'll find a way to have fun. So take care. Be well. I'll see you again next week.